Guys, in this video, we're going to be taking a look at the XAUUSD, okay, also known as gold versus the US dollar, and just take a look at this chart display. From today, there were only 3 picture-perfect setups from today, okay, for a staggering 2,800 pip potential. Yes, you read that correctly, 2,800 pips one day, one session. For those of you hardcore Forex traders out there, this is the pair that you gotta be watching. All right, so let's take a look at my XAUUSD trading strategy. Okay, greetings traders. It's Mark here at NinjaTrader.com, the world's #1 resource on learning to trade price action. And you ever have one of those days where every trade seems like it goes right? You know what I mean? I posted the first video on gold dollar, I don't know, a few months ago when one of my customers brought it to my attention, and I just fell in love with it, man. This thing has moves that would defy belief, okay? You'll never find any pairs, not to my knowledge. You'll never find any pairs that move 2,000 to 3,000 pips on a daily basis. And you know, today was just one of those days where, man, every single setup, right? 1, 2, 3, it just worked to perfection. And not only that, but if I draw my favorite, okay, you know what's going to come next here. If I draw my favorite 30% trigger line, right? 30% of that bar, 30% of this bar, and 30% of this bar, every single retracement worked almost to the exact tick. I mean, today was one of those days where it felt like you're basically printing money, right? A money printing machine. I don't want you guys to think that every single day is going to look like this, right? This was definitely one of those days where the market just smiled down upon you, and it was like taking candy from a baby, or I should say taking candy from retail traders. Okay, that's the whole nature of the game, guys. You know, you really got to understand that professional trading, it's a zero-sum game, especially in Forex, right? Because there's a lot of games people play in the Forex market, right? They try to slap on their indicators, their MACD, their moving average lines, okay? Don't know why. I mean, if I show you the list of all that garbage, I mean, it's freely available. All this garbage here, right? I mean, look at all this stuff here. I mean, all these, like, there's a never-ending list of indicators. Like, there's probably hundreds of this garbage indicators here. But you know what? Nothing is going to beat price action. Nothing is going to beat retracements. There's just no substitute for the ability to paint kind of a clean and crystal clear picture of what's happening in the market by simply focusing on the trend, okay? First green bar, that's your long signal. First red bar after any green, that's your short signal. The end, right? I hate to have to keep telling people this, but if you want to find success, man, in Forex, you gotta dumb it down. You ever heard of the concept KISS, right? Keep it simple, stupid. It's called KISS. You gotta embrace that concept. So anyway, which one of these signals, you guys want to take a look at? I mean, there were 3 really nice ones: short, long, short. How about this short one here? This was the biggest leg of the move here, right? So let's take a look and really see how did this signal itself play out. So you know what we're going to do now? We are going to jump to our smaller time frame chart. But before we do that, let me set this up for you, okay? For those of you guys that are brand new to the channel, this is a signal bar on the dyno charts. But just because it's a signal, okay, a short signal, doesn't mean that you randomly sell it when the bar prints, right? What you want to do is you want to capture the high, you want to capture the low, and you want to populate this information into a smaller micro chart. I've called mine the T-bars. You can call your micro chart whatever you want. But what's more important is the retracement, which you can see happens right in this section here, right? So let's go ahead and jump over to the smaller time frame chart. Quickly label this so we don't get confused here, this is the T-bars chart. Okay, and you see these lines here. All right, don't freak out. These lines didn't magically appear. All right, all these three horizontal lines represent is the zone from the dyno charts. Here's the high, here's the low. Let's see on the micro chart. Okay, here it is. Here's the high. Let me stretch this out for you. Here's the high, and here's the low. What's this middle line here? Well, if we jump back to the dyno, this middle line is what I like for my retracement. I've come up with the number 30%. You know, a lot of you guys like 50%. Some of you guys like 10%. You kind of have to decide what's a good retracement for you, right? But I like 30, which is why if I go back to my T-bar chart, this middle line here, in fact, let me just stretch this out so we have everything symmetrical. And there's one last piece of business. We got to be mindful of the timestamp, right? How do you do that? Well, let me show you. So this signal here printed at exactly 7:43 a.m. Chicago time. Can you see that? Can you guys see that in the x-axis right there? It's 7:43, right? So we're going to go back to the smaller time frame chart, and we're going to approximately draw 7:43, just like that. And this is a red stripe. Why did I color it red? I think that's obvious, because this is a short setup, right? So now our smaller time frame chart has been perfectly optimized. And guys, you saw how long that took. That didn't exactly take a lot of time, right? So after 7:43 a.m., you're simply looking for shorts. How do you identify a short setup? Well, you've got your high, you've got your low, and you're waiting for this 30% retracement line to get tagged, which if we jump back and show you the dyno chart, I mean, 30% got hit across the board today, man. That's why I was saying today was a session unlike any I've ever seen. It's gorgeous, right? So anyway, let's zoom in here, all right? Let's get to the good stuff, okay? Really zoom in here, okay? So you know that this line here is the 30% retracement level. We want to wait for this line to be touched. It gets touched right there. So what do you do now? You guys know what comes next? You start drawing trend lines on top of pivot points, right? And we're looking to connect a trend line in this fashion, an upward sloping trend line, because we're predicting that the market's going to sell off by breaking the trend line into the downside. Make sense? So as you can see here, we got our first trend line right there. The entry happened right here, right? Stop gets placed one tick above the swing high. And what happens on this trade? Well, we get stopped out, right? Because we get filled on this trade, but the market goes right back and takes out our stop. And you guys know that's part of the game, right? But we are still bearish. Nothing changed on the dyno, right? We didn't get any green. As long as this is red, as long as you're inside the zone, and as long as it touches the line, you're still looking for shorts, right? Remember what I said at the start of this video? KISS. Keep it simple, right? So how do you look for shorts? You do the same exact thing over here. Draw that trend line by connecting two pivot points. Wait for the trend line to break right there. Place your stop at the most recent swing high, okay? Not brain surgery, not rocket science. Any 6-year-old could have realistically crushed it today. Okay, well, I'm exaggerating, probably not a 6-year-old, but you get the idea. Simple, clean, easy. If I squish this in, all right? Let's squish this in, see how this trade played out. We got in right over there. Come on, man. Okay? 2,800 potential pips. Probably more if you milked it all the way until the close, right? And if you take a look at where the crystal clear signals and entries happened, I can only see two of them. One right there and one right there on both of those trend line breaks. Makes sense? And everything that I showed you here on my T-bar chart happened in the dyno, what I call higher time frame chart, right in this section there, nailing the exact high before the sell-off, right? So what's the takeaway, guys? Number one, what I really want you Forex traders out there to do, okay? You got to start taking a look at gold dollar. This is probably my number one favorite pair. Don't ask me why it's my favorite. It just is, for no other reason other than it moves like a beast, right? And takeaway number two, right? Please stop jerking around with indicator garbage and candlestick nonsense, okay? Like I said, if I show you the free indicator list, there's hundreds of all this useless MACD, and I mean, look at some of the names on this. Zigzag, like, I don't understand why people mess around with I really don't. And like I said, guys, at the beginning of this video, okay, trading is a zero-sum game. For every winner, there's got to be a loser, okay? And the only way, in my opinion, okay, I welcome anyone to challenge me on this, okay? The only way, in my opinion, to dominate Forex trading is you got to have a disciplined approach. You got to have the right mindset, the right attitude. But more importantly, above all else, you got to have the right type of charts, okay? Because that's going to make all the difference in the world, all right? Hey, listen, thanks for watching this video on XAUUSD. Probably one of my all-time favorite Forex pairs in the world, okay? If you're interested in learning more about the Dino bar charts and the T-bars and all my strategies on how the software can transform your trading, then get in touch. Guys, thanks for watching this video, and I'll see you on the next trade.